right, everybody, here we are with this week's Mortgage Minute. We have Kelly is back. Woohoo! And we have Tatiana who's with us. Hey, Tatiana, how are you doing?
Hi. I'm good. How are you guys?
I'm good. You good?
I'm good.
Okay.
Hey, I missed it. Were we naughty or nice with the rates last week?
We were nice last week.
Okay.
You were nice last week. I'm not wearing any hat this week.
It's neutral, huh? Okay.
It's neutral. Yes. Let me share with you. And also for the week of May 10th to 16th, interest rates remain unchanged. The mortgage rates, as we know, tied to inflation. So a little bit of a good news that inflation is cooling down slightly. And U.S. Labor Department said that on May 15th that inflation rate had dropped to 3.4%. So, with that, are the Fed gonna lower rates or not? Like we were talking about that last week, Sean,
Yeah.
that 1 week they say they're not gonna do it, another week they say yes they will. Now it's neutral, they're not 100% sure, so who knows, we'll see what happens. But the inflation numbers are down, so it's good. Rates change every day, so they could improve a little bit after the news, then they rebound back a little bit. So, but overall, in general, rates were neutral. But you can see here, 30-year fixed, we are at 7.02, not too bad. And 15 years at 6.5. FHA is at 6.5. Jumbo is just slightly higher, 7.31.
Okay.
Yeah, not bad.
Have you seen any changes with regards to the number of applications that have been coming through?
We're busy. We have a lot of people applying, and I think what do you see? Is there a lot of competition, a lot of houses coming out on the market?
Yeah, we've had a little bit of an influx in inventory this last 7 days, and we actually had a little bit of a drop in buyer activity, which was kind of surprising because it's 2 weeks of increased inventory, and usually buyer activity follows that. But there's still a lot of competition. Things are still getting multiple offers, but that seller's market neutralized a little bit. Still a strong seller's market, just not increasing in seller strength at this point. But we are getting towards the end of it. Like there's a lot of graduations going on right now. So I think a lot of people are traveling and doing stuff like that. So I think there's another kind of interruption in the normal market forces.
Yeah. So I think that this is the great time to buy right now, even though the rate is at 7 and people don't like to hear that number. But historically, it is the average interest rate, and if we're gonna wait until it drops to 6 or 5, whenever that's gonna happen, everybody's gonna jump on it, right? And never tired of repeating, marry the house and date the rate, right? So
that's right.
right now, secure it when it's not super high, and then refinance, because you're gonna wait until it drops to 5. The price is gonna go up. What is the average appreciation rate in Virginia? Over 5%, 6, 7.
Oh yeah, it was like 6-7% last year, depending on the county and the town, the township and stuff. Yeah. Okay. Well, it's good. I guess it's not bad news, but it's not good news. So it's just like neutral. Okay. So question for the week: what are the fees associated with getting a mortgage? And really, is there anything that you can do about that? Does it vary lender to lender? Like, give us all the deets on that.
So the fees for the settlement, they kind of have a couple of different categories. We have lender fees.
Okay.
And that's what you look at when you shop for a mortgage. You look at the interest rate, but you also have to look at the lender fees. That's it's a part of overall closing cost fees, right? But it's a separate category, because that's where you look at how much a lender charges for their origination fee. For example, some call it origination fee, like Prosperity does. Some call it underwriting fee, and typically they divide it to underwriting and processing fees. So be on lookout for that, because you might see $600 underwriting fee, but there's also $700 processing fee. So you need to combine them into one.
Right.
Sometimes origination fee could be as high as 1% of the loan amount. Some have just a flat fee, but also the discount points. That's important part. What's discount points? It's a charge to get discounted interest rate. So I can tell you that right now the rate is 7.01, let's say, with no points. But if you want to get lower interest rate, you're gonna pay a certain percentage of the loan amount, and it varies from day to day. And you need to see, does it even make sense for you to buy that point down? We do the calculation, how much it's gonna improve your monthly payment by, and how much it's gonna cost you, how long it's gonna take you to recoup, so things like that. So that's lender's charges, so you need to look at. Then we have fees like title company's fees that title company charges, lender's title insurance that is mandatory because lender wants to be protected, and title insurance protects for ownership on the property, right? So any potential issues, it covers that. Fees like appraisal fees and some other small fees for that lenders might have to pay to vendors to do the transaction, like credit report fee, flood certification to check if property is in flood zone, and so on. Taxes, sales taxes, transfer taxes, or recording fees. It's where title company has to record the deed in land of record saying that Joe sold the house to Mary, now Mary is the owner, so those fees are also included. Owner's title insurance is basically the one that is optional in this list, because owner's title insurance is not mandatory, just highly recommended for buyers to get, again, to protect their ownership on the property. You pay it once, it protects you for life. But you can Google information on owner's title insurance, what it covers, what situations you might get in that you need it. It's one of those things. If you don't need it, you don't need it. But if you need it and you don't have it, like
you regret it.
Yeah.
We've done a few videos on some horror stories.
It's a big get it. Owner's policies are fantastic. I'm all for it.
So I think out of all these fees, owner's title insurance is, you can remove it. Maybe you can chat with title company to see if they could give discount on their fees, with the lender as well, to see, if they can give some credits or maybe lower their discount points, and such. So that's the pure closing cost. On top of that, there are also prepaids and escrow, such as, you pay in 1 year of homeowners insurance up front, you pay in some money into the escrow account, taxes and insurance, and that's not really negotiable unless you do have in some cases, some programs, you can have option of opting out from having taxes and insurance collected into escrow, but not always. And if it's there, you can't really negotiate that.
Okay. So on the lender side, it's mainly just whatever titles they causes, the origination fee or the processing fee or whatever the
underwriting fee,
and then any points towards it. That's specifically to the lender. Okay, gotcha.
And I think everybody needs to remember that they can't shop for the tax charges and recording and things like that. That's all county specific where your property is. So you're shopping for your property and the price you're paying for it. You're shopping for your lender and the fees they charge. They do have the choice for their title company, right? Title companies, they charge differently, so you can shop for that. And then I guess they can shop for their homeowner's insurance. And other than that, those other fees they see, those are the
state
What's
required.
that fancy word where you guess at a number?
Educated guesses, yeah.
What, you know, you estimations, right? The estimation.
Those fancy big words.
Yeah, the fancy big words. Because they're estimates, and once it comes down to settlement, it doesn't matter which lender you go with or which title company, the recording taxes and recording fees and all that, that's all gonna be the same. That's all said and done.
I have a question for you. So you bring up a good point with all those fees that are there that really aren't negotiable and don't change. As a lender, I know that when you give a loan estimate, part of, and maybe not necessarily just the loan estimate, but also like a pre-approval letter or like a, trying to show what their estimated closing costs might be, you'll give that estimated cash to close. Do all lenders always include all those fees in their original estimated cash to close? Or is that a place where some lenders can kind of soften the blow and try to win the business by not including some of these fees to look like they're less expensive when they're competing?
That's a very good point. Yes, some lenders just, don't include some of the fees or they underestimate. I prefer to overestimate, honestly, because I would like my client to have a pleasant surprise at the end.
Right.
Because you just never know what could be added to the cost. Like maybe if you buy in condo association, the condo association might ask you to pay 1 or 2 months worth of condo fees, right? So that's gonna be on top of that. So it's better, I feel like it's better to give a higher number than lower, but some lenders don't disclose even fees that are typically, you have to disclose.
Yeah.
So that's why when you shopping for a lender, don't just look at the rate and the total bottom line, look at the rate and lender fees, because everything else, no matter what I say, if I say that taxes are gonna be 3,000, but they actually 2, they're not gonna charge you 3, right? They're gonna actually charge you less. So it's better just to look at lenders' charges.
Yeah.
And I had a strategic reason for that question, because we've had many conversations with many buyers with you on that, where they'll get their loan estimate or their pre-approval letter, and we're like, okay, but you gotta compare apples to apples, and a lot of times it's not an apple to apple comparison. So
because I feel like more shady lenders, they try to string the client along long enough, and then they say, oh yeah, here's this, and they're too far into it to make any kind of changes, right? And I feel like they bank on that, and the only reason they would is because they're shoddy lenders. That's why.
Sometimes, what they also do, they could say, okay, I'm giving you this rate and I'm giving you $3,000 credit.
Yeah.
But then they charge in 3,000 for points, and then they give it, so it's a wash at the end. Or maybe they even charging more than they give in the credit. So that's why it's super important to look at that section and a loan estimate. It's the very first section A that talks about lender fees.
Because they don't have to make good on what they write on a pre-approval, but they do have to make good on what's on an official loan estimate, right? And that's what we have to see.
And that's why you got to see that, so you know what's what and how to compare. Okay.
That's right.
Yes. Talk to Tatiana. All right. You have any other questions?
I don't.
Okay. All right. Well, thank you. It was good information. Enjoy your time in your North Carolina.
North Carolina and Charlotte, yes.
Yeah. All right. Enjoy your time there, and we're gonna go celebrate some graduations this weekend. So.
Oh, nice.
Yeah. All right. Well, we'll see you next week. Oh,
Okay.
wait. How do people get in touch with you?
Oh yeah, your number.
Oh, yeah. 571-245-3000.
All right. See you next week.
Bye.
Bye.